I'm just going to be moving in the other auditor, and then we're going to be set to go. Good morning, Donald. I was wondering if we could test your audio. Can you unmute?
Hi, good morning.
Perfect. Thank you very much.
Well, good morning all, and it is a privilege for me to call this meeting to order and to welcome all members of council and all members of our staff that are in attendance today that will provide us facts and information so we can make the best decisions for the corporation of the County of Huron and our 61,000 residents. Welcome also to all members of the public that are joining us this morning and any members of the media. I would like to indicate at the outset that council meetings are available live through Zoom, and recordings may be posted online on County of Huron's YouTube channel. You may be seen and or heard as part of these broadcasts, and your name, comments, and or presentation materials will become part of the public record. This is an audit committee meeting that we are starting with this morning. And with that, I would entertain a mover and a seconder for the approval of the agenda. I would like to indicate that we would like to welcome Dalton Hamilton, who is the citizen representative for the audit committee. And as the agenda is amended to include Donald Harrison from KMPG, who will be in attendance for both the open and the closed session. And with that, I would entertain a mover and a seconder for the agenda as amended, and that would be Councillor Finch and Bazinet. All in favor of the motion? And that is carried. Thank you. Do any members of council have a pecuniary interest or general nature thereof to indicate at this time of any agenda item on our audit committee? Councillor Noel, please.
I apologize, Mr. Warden. On the audit committee or on the, my apologies, I'll hold off.
There's an audit committee. Thank you very much for that. Is there anyone else? Seeing none, I thank you. The order of the business first will be the 2023 audit findings report, and it's a pleasure for me to introduce our Treasurer and Director of Corporate Services, Michael Bloomhagen, to present at this time. Michael, please.
Thank you, Warden McNeil. Today I will be presenting the audited or draft audited financial statements to the audit committee and county council. And subsequent to my presentation, Matt and Donald, they'll be presenting the audit finding report. So that's basically a summary of the audit findings for 2023. And then you as audit committee, along with the citizen rep and our legal counsel, will go into a closed session. And that's where you could discuss anything pertinent to the audit or our financial statements directly with the auditors without the staff being present. It's always exciting to present the financial statements, and I didn't realize there'd be such a crowd here for me today, but it is fascinating material, and yeah, so I'm actually not surprised that everybody is here today to for this presentation. So. But it is my pleasure to present these statements to County Council. And it really, again, was a pleasure working with Matt and Donald and the team at KPMG. It was another seamless audit from our end, and we appreciate their work and efforts all along the way. And again, just really want to say thanks to my team, my staff, and all the incredible work that they do, because they really make sure that this is a smooth process for myself, and I'm able to present to yourselves a clean audit. So just a big thanks to my team. So pending your approval today, the KPMG will issue the final statements, but there are a couple outstanding items that still have to be addressed, and we'll talk about those through the course of this presentation. I'm just going to share my screen. Okay, so on the second page of the, or page 3 of the financial statements, we have our independent auditors report. So the first section here is the opinion of the auditors in relation to our financial statements. And essentially what I'm looking for, or we as staff are looking for, is this highlighted sentence here with, just want to expand that a little bit. With their opinion. So in our opinion, the accompanying financial statements present fairly in all material respects the consolidated financial position of the county. So that essentially is some assurance that the statements are materially correct. And that's what we look for as staff. So that is always the goal when going through an audit. So on page 6, this is our consolidated statement of financial position, and this is formally known as our balance sheet. So overall, we did have a good year this year, or for 2023 for the county, with an overall surplus, which I will get into here shortly. We did have actually one thing to note. This includes our proportional consolidation of Huron Perth Public Health. So the way, because it is controlled by 4 different municipalities, Stratford, St. Mary's, Perth County, and ourselves, we have to consolidate our portion of the Huron Perth Public Health in our statements. So you'll see that both in our balance sheet here and also the statement of operations, that we have to account for approximately 43% of their numbers. So the numbers before you today will include 43% of the health unit. So overall, we did have an increase in cash up to 96 million. And that's for a number of different reasons, one being the surplus, another being increase in deferred revenue, some delay in payments for some of the liabilities, some additional accruals that were set up, but we did have a year-over-year increase in cash. Accounts receivable, this is all monies that are owed to the county, and for the most part, pretty much flat year over year. This bank indebtedness that you see here, this is actually not the county. This is actually our share of the health unit. So they must have some bank debt. So we're just showing our share of that debt. So that was an increase over last year and new to our statements. The accounts payable and accrued liabilities, we did see an increase here year over year over last year. So that went from 16 million up to 19 million, or almost 20 million. And this is money that we owe eventually to other third parties. So accounts payable went up just over the year end cutoff by approximately 2 million. That's just our general trade accounts receivable in terms of just the timing of some of our payments over year end. We had set up a number of clawbacks for the homes in terms of some of the funding clawbacks that would be owed back to the province. And also a number of public works holdbacks that we set up for some of the large construction jobs that happened last year. It was expense, but we actually haven't paid it out yet. So that is set up as some statutory holdbacks, and that was about $500,000. So that accounts for most of the increase there in the accrued liability line. In terms of the deferred revenue, so this is money that is actually paid to us or flowed to us in advance of us actually spending it. So we have to have it sitting on our balance sheet until we actually expend the funds, and then we would recognize that as revenue, and it flows through the income statement. But now, there was an increase in terms of the funding that we did receive, particularly with the OFI Sanders Street funding. So some monies were flowed to us. We just haven't spent it yet. So therefore, it's actually increasing our deferred revenue. Post-employment benefits obligation. This is just an actuarial assessment. This isn't money that we have to pay out at once. This is just something that is an assessment or an actuarial assessment of this benefit that we do offer our staff for early retirement for their benefits. Again, we raise through the levy just the annual amount that we actually pay for that. So we're actually never paying that 4.3 million out at once, but we do have to account for it. The debenture payable, that increased to 5.7 million. So we did have one additional debenture that we raised last year for phase 1 of the public works yard. And we'll be looking at incurring some additional debt for phase 2 of the same project. So the asset retirement obligations. So if you recall, I did speak touch on it briefly through the last year or two. It is a new accounting standard that we had to implement for 2023. So this essentially is a recognition of some future costs that we're going to incur for remediation of some of our assets. So we have a legal obligation to, when we remediate a building, that we have to remove the asbestos. When we remediate our patrol yards, we have to remediate the soil that would be around the underground fuel storage for fuel contamination. So that at 11 million is our assessment in terms of what that future cost is going to be in today's dollars, what that future cost would be to remediate all the asbestos across the county and the fuel tanks. And these are just estimates that we worked with to come up with an estimate per square foot for our buildings. We obviously don't know all the buildings that have asbestos in, but based on their age, we have to make some assumptions that it does exist. So that actually has inflated our capital assets, and we had to reflect the corresponding liability on our books. But that $11 million, at this point, we're actually not paying that out. Those costs will be incurred in the future when we actually go to renovate or remediate some of our assets. So it'll be an integral part of our asset management planning because we'll have to account for those costs in the future. And tangible capital assets, we did have an increase from 166 million up to 187. Part of that is, as I mentioned, the asset retirement obligations of 11 million, but we also had a net of depreciation of an extra $10 million in terms of capital expenditures last year. So as we're increasing our CapEx through over the years, we'll see a general increase over time of our book value on the tangible capital assets. So the one item that is missing as part of the tangible capital assets, and that's why is the land for the Gibbon Street project. So that was donated to us or contributed to us by the town for $1 in 2023. And through the audit, we actually had missed setting that up on our books. So we have to assess that contribution or that grant donation, even though it was provided to us, we have to set it up at fair market value. So that is one thing that we have to get an estimate or an appraisal for what that fair market value would be in 2023, and we'll set that up on as an asset for 2023, but we just don't have that value yet. But at the end of the day, it's not going to change the unallocated surplus that we're presenting today. It's just a non-cash accounting entry that we have to do to reflect the fair value of that transfer. So that is pending, and you'll notice that or note that in the audit finding report as well. That is one outstanding issue. And just with respect to the asset retirement obligations, there was also in terms of calculating the accumulated depreciation to date on that, I actually did make one error initially in terms of how I calculated the accumulated amortization to date. When I did that, I looked at, so there's three different methods in terms of setting up the liability on your books. There's a retroactive application, there's a modified retroactive application, and also prospective application. So when I did my initial calculation for the accumulated amortization, I applied the retroactive application, but we were actually moving forward with the prospective. So I did have to make that change. Initially, I had depreciation booked for 5.9 million of the 11. But based on perspective, I had to change that to 900,000 of the 11 million being amortized. So that 11 million is going to be amortized from today or 2023 forward through to the end of the useful lives of our particular buildings. So that was an adjustment that I had to make, and that was just an error in terms of how I applied the different application methods for calculating the amortization. Doesn't change the 11 million in terms of how we came up with that estimate. It just changes the amortization to date. Page 7. Again, this is our statement of operations, or formerly known as the income statement. And this is basically a high-level summary of all the accounts that we do have at the county. There's about I don't know, 3,000 or 4,000 accounts that actually get rolled up in here. And it just presented nicely on one page. And again, this includes the health unit. So the revenue, 43% of the health unit revenue is included, and also 43% under the expenses under health services would also be included as well for the health unit. But overall, we can see that we did have an annual surplus of 8.4 million over essentially budget, but unallocated. So what's left not to be, or what's left unallocated to specific reserve or capital, that's 4.6 million. So the true surplus to budget for ourselves is 4.6 million. And in my council report later in the county council agenda, I'll have more details on that 4.6 million, and in terms of and also provide a recommendation to council in terms of how we'll distribute that to the various reserve funds. But you can see revenue under the taxation. We had a little higher revenue for tax than budget, and that was due to supplemental tax revenue. So we had more supplemental income come in than expected. The government transfers for the federal government, that's primarily gas tax, and we do have a little bit of funding throughout the various programs, but the majority of that is gas tax. The majority of our government funding comes from the province. So we had 53.9 million in terms of funding from the province, and the increase there over budget was essentially monies that we received for the Sanders Street project or OFI, which we did not have included in the budget. Fine income, we had to increase in our provincial offenses revenue year over year, so we did have an increase there, and a significant change or increase over budget for our investment income, but we had a full year of maximum rates in 2023. So we did have a significant benefit in terms of our overall interest income, but unfortunately we are seeing a downtrend in those rates now. So that benefit that we've accrued to date, we'll actually see a little bit of loss or decline there as the rates come back a little bit. Overall, on the expenses, we do have, these are just summarized by kind of high-level functional categories. So within general government, we would have corporate services, we'd have the BTS or IT, property services, finance team, and just general corporate expenses. So we did see a few expenses higher than budget, and some of those related to the depreciation that we had to book for the asset retirement obligations. There's some severance costs that we had to book and whatnot, but a little higher than budget there. The protection services, that is, for the most part, that would be our provincial offenses department and also emergency management. Transportation services, that is our public works and public works fleet. So we did have some savings here overall, and the savings within transportation services really was part of the primary driver for our surplus for 2023, and that was largely due to the winter maintenance costs were significantly favorable compared to previous years. Environmental services, this would be our hazardous waste site at the Mid-Huron landfill. Health services includes HPPH, but also EMS. So a little under budget there, or it looks like we were under budget, but that's primarily the health unit, not as our own EMS was pretty much in line with budget. Social and family services, these at 41 million or almost 42 million, that includes homes, Ontario Works, and children's services. Little under budget there, and we did have some savings within childcare. Social and public housing, that's all of our housing and homelessness services. We had some savings here just throughout the housing budgets, a little bit of savings just on the public housing side on some of the expenses, repairs and maintenance, and also some savings within the homelessness program. Recreation and cultural services, that would be museum and libraries. Little savings there on the salary side of things. But quite a bit, but you'll see about a $500,000 increase over 2022. And that's just due to the fact that library and museums, they're just had a full year of normal operations post-COVID. And on the planning and development, not only planning, but this also includes our economic development, economic development as well. And we just some lower costs overall there. But overall, as mentioned, $8.4 million surplus. So moving along, statement of changes in net financial assets. I'm going to touch high level on the remainder of some of these schedules. But there was a big decrease year over year in our net financial assets, and that's largely due to the asset retirement obligation. So it's a non-cash charge. You can see here that it actually reduced our overall net assets because we have to book that liability. But it is a non-cash adjustment. Couple notes that I do want to touch upon. Before I open it up for some questions. So on page 21 of the PDF package, note 9, again, just touch on the asset retirement obligation. So these are the amounts that we're estimating for future remediation. So for asbestos, we estimated 10.8 million. And for any other contamination with respect to fuel tanks, we had a $400,000 estimate. And again, in 2023, we amortized that cost at $918,000. But again, that's a non-cash adjustment, and I took that into account for my unallocated surplus. And I will just touch on the reserves, which is on page 28. So small decrease year over year, just in our overall reserves. So we're still at 68.8 million in terms of reserves. Plus we would have the unallocated amount that would be added on top of that. So there'd be about 73 million there in terms of full reserves. That's not all available for council's use. There are some committed costs in there, and we also have some self-sustaining reserve funds for fleet. And we do have in 2024, we actually have quite a large number of draws from this fund with respect to the Gibbon Street project, some for the Sanders Street project, and also some large projects at the homes. So in 2024, we'll actually see a more significant reduction in our overall reserves. Just our general reserve for contingency, we're at 10.7 million. And we did see a reduction this year in 2023, and that was a result of the 2.2 million that we paid for the SWIFT project. So that has been fully funded and paid, and that has come from our reserve for contingency. So I think with that, I will just open it up for questions from council before I turn it over to the auditors for the audit finding report.
Thank you very much, Mike, for that overview of the audit findings report. Do any members of council have any questions at this time of Mike on this overview? Seeing none, I thank you very much for that detail, Mike. And I would like to invite Matthew Goderich and Donald Harrison to present to us, please, on the draft audited financial statements. Welcome.
Good morning, Warden, and thanks for allowing us to be here. If I could just ask that our presentation be shared, and we will direct people to, or the person controlling it to advance the pages as necessary. Oh, that's not mine. I don't know anything about subdivision plans.
We've got the treasurer on duty right now, so just bear with him.
Okay.
Everybody's here to watch him. He's a little nervous.
He'll be fine. I have all the confidence in the world. Perfect. And as introduced, with me is Donald Harrison, who is the manager on the account and has been for a couple of years now. So if we could scroll down to page 5 of our report, the technology highlights, great, thanks. And just quickly here, just to remind committee that we continue to develop and incorporate the use of technology in our audits. Right now, we're looking at activities for efficient and secure file sharing, which we use very effectively with county staff. As well, we're using audit tools that allow us to perform procedures either at a higher quality level or at a higher level of instance. So we're doing sort of more checks, and it improves the overall process for which those things are undertaken. And this will continue to develop. On the next page, as Mike quite rightly mentioned, we are, effectively complete our audit. We just need to sort of tie down the final fair values of those land transfers that were discussed. We don't believe that's going to have a material impact on the financial statements. I think we're looking at values anywhere from about $500,000 to $2 million. So once we sort of narrow that down and get those adjustments in the statements, we'll be in a good spot. As we move on to the next sort of set of slides, Donald will take a couple of minutes to outline our response to the major sort of areas of the audit, and then I'll conclude at the end. Donald?
Thanks, Matt. So one of the significant risks we identified was the management override controls. No matter how good the management controls are, there's a presumption that management in a unique position to override those controls. So our response to address this risk surrounds around testing of journal entries. We tested the design and implementation of controls around the journal entries. We tested 100% of the population, and also we isolated high-risk entries. We tested them separately, and we did not issue any issues noted. So moving on to the other sections, in addition to the significant risk, there are other material misstatements that we identified. One of them was, as Mike mentioned, asset retirement obligations. We directly confirmed with the engineers who did the valuation or the estimations, and we made sure that the estimation done by the engineers was appropriate and correct. And we also tested the pricing and also the completeness of the assets included in the asset retirement obligation estimation. As Mike mentioned, there was a calculation error, and the management corrected subsequently, and it's included in the management representation letter. And moving on to the next section. So revenue and deferred revenue, one of the focus area, we tested the different types of revenue, including taxation, grant, and user charge revenue with combined approach of test of details and substantive analytical procedures, and we did not note any issues. Moving on to next slide. And one of the other accounting standard that was implemented was financial instruments, and we had a discussion with the management, and we noted that there is no significant impact to the county's financial statement for the year ended 2023. And payroll is one of the large expense for the county, and along with the operating expenditure, we included our testing operating expenditure as well as the payroll. For payrolls, we did a payroll analytical procedures, and also we obtained the actuarial report and made sure that the retirement obligation balance was accurate and properly disclosed in the financial statements. And we also performed substantive analytical procedures over operating expenditures disaggregated to different departments and the sections. And moving on to another section, the tangible capital asset is the biggest asset for the county. We discussed the overcapitalization policies and the application with the management. We also performed the statistical sampling and tested a sample of capital additions. And we reperformed the depreciation calculations. And also we reviewed expenses to ensure that the capitalization was appropriate. And I turn it over to Matt to take over the rest of the sections.
Thanks, Donald. So as again, Mike quite rightly identified, there was one correction that was required in the financial statements, and that has been made, and so we're happy for that. In terms of uncorrected amounts, we didn't identify any amounts that remain uncorrected, and so this is really good information for committee to have. Again, as Mike quite rightly identified, our audit opinion is a clean audit opinion, so we are saying that the financial statements are materially accurate. When we incorporate that with the fact that there was only one correction required, and there are no uncorrected amounts, what committee can take from that is effectively that the books and records that we received for audit were very well done. They were accurate and only required sort of one correction. And in that case, that was a new process that hadn't been undertaken before. So there's a little bit of learning on the part of staff to get through that. And we certainly don't expect that going through in the future. The further thing that I think committee can take from this is that means that the information that they're getting on a regular basis throughout the year, tends to be accurate as well. So, we're obviously not commenting on reports that are happening throughout the year during interim periods or the budget or anything like that. What we can say is, the amounts that we do get at audit time are reflective of the actual activities for the year. And so that does provide some level of comfort to committee for that. And furthermore, on the next slide, we do disclose that there are no significant deficiencies in internal control. Certainly as we go through things and we identify areas for consideration or improvement by Mike and his team, we sort of highlight those, but certainly don't think those are significant. And so as when we look at the overall financial statements and the auditor's report card on them, we look at, okay, clean audit opinion, small amount of corrections, no significant control deficiencies. This is sort of the three-pronged green check mark that we give. As we just sort of scroll into just some additional information for the financial statements, some new standards identified and implemented this year. Obviously, the biggest one for asset retirement obligations. And then on the next slide, in terms of other sort of reporting matters, nothing for this year, but we do note for next year there will continue to be some additional accounting standards. Revenue standard, which we're not anticipating will have a significant impact. Public-private partnerships may, depending on the types of transactions and activities the county finds itself in. The last thing I will comment on is two pages down on independence. So as you know, we are required to be independent of the county in order to perform our role appropriately, and we maintain that independence and don't really have any threats to it. So that is also a good thing. The rest of our report includes a number of appendices that we're required to provide for information or additional information that we think may be useful to committee or council. And as I close, again, I want to thank Mike and their team for allowing us to conduct our audit on a timely, efficient basis, and we completed it on budget. And without their cooperation, we wouldn't be able to be here today. So I'll pass it back over to the chair to entertain any questions or comments.
Thank you very much, Matthew and Donald, for your very positive, reassuring comments to County Council. Are there any questions at this time of either Matthew or Donald on their presentation to us? And I will go to Past Warden McClellan, please.
Thank you, Mr. Warden. Just to follow up on when Donald gave his report, if I understood correctly, there was one area where he was talking about entry controls. So they did a lot of extra testing just to make sure that everything was done right. Matthew had stated that there was no significant control deficiency, but I'm just questioning, are there extra controls that we could put in place that would eliminate the concerns from the auditors in those areas? Or is that just something that can't be accomplished? So I'm just looking for an answer on that.
Yeah, so I think you're referring
question,
to the page of our report where we talk about management override of controls. And this is a required step for all audits, regardless of how good your control structure is. So every single audit in Canada has to think that there may be an opportunity for management to override controls, and therefore we must do some additional testing in this area. It is not specific to the County of Huron, and we're not even saying that the County of Huron doesn't have a strong control structure. To the first part of your question, could more controls be added? Well, yes, virtually every entity could add more controls, although at this stage we're not recommending such additions. And to the second part of your question, could we avoid this part? No, because the audit standards make us do this no matter what.
Thank you for your response, Matthew. That satisfies Past Warden McClellan. Any further questions of our auditors at this time? And if not, thank you very much, Matthew and Donald, for presenting to us this morning. And it is now appropriate that we move into a closed session. And so I will entertain a mover and a seconder that the Audit Committee does now go into a closed session at 9:36 a.m. under Section 239 of the Municipal Act 2001 as amended to discuss an item that relates to personal matters about an identifiable individual, including municipal or local board employees. And further that, Director of Legislature Services Clerk Cronin has delegated clerk's authority to Solicitor Greg Stewart, who shall remain in attendance. All members of the Audit Committee, as well as Matthew Beddick, KPMG LLP Chartered Accountants, shall remain in attendance with Donald Harrison. A mover and a seconder, and that would be Councillors Finch and Goderich. All in favor of the motion. And that is carried. I thank you. And our clerk will now secure the meeting for our closed session. Thank you. Okay, we are back in our open session, and I would entertain a mover and a seconder to rise from the closed session at 9:46 a.m. And that is Councillor McClellan and Anderson. All in favor of the motion. And that is carried. Thank you. As to reporting out, I would like to indicate that Huron County Council received a report from the County Auditors KPMG. I would now entertain a mover and a seconder that the Audit Committee of the County of Huron approve the draft consolidated financial statements for the Corporation of the County of Huron for the year ending December 31, 2023, as presented August 14th, 2024 by Treasurer and Director of Corporate Services, Michael Blumhagen. P. Heffer moves and Councillor Van Stone seconds. All in favor of this motion. And that carries. Thank you. And second to that the Audit Committee of the County of Huron approve the Corporation of the County of Huron Audit Finance Findings Report for the year ending December 31, 2023 by KPMG LLP Chartered Accountants. A mover and a seconder, Councillor Harding and Finch. All in favor of this motion. And that again is carried. And now a motion to adjourn at 9:47 a.m. Goderich and J. Heffer. All in favor of the motion. And that is carried. Thank you very much. The Audit Committee meeting is adjourned.